Trade It Now with Charles Moon, stock strategist at Prosper Trading Academy. And how are you then approaching your example trade for Netflix?
A bit cautiously, valuation is always a concern going into earnings. Obviously, Netflix has been one of the better performers in the markets since we've rallied off the bottom here. They've performed pretty well over the last three earnings report. But again, once we get to these frothy levels and expectations are at peak, it's really difficult for a company to appease the investors and shareholders to hold on for more upside as opposed to go risk off. So what I'm looking at with Netflix right now, with the expected move being around $100, is the 1375 call calendar. I'm going to be looking at the July 17th and 28th, or maybe not. The following week's call calendar, I'm sorry, for the 480 debit. Now, the expected move, again, being at $100. I'm not so sure we're going to be able to hit that move, but if we do, it'll balance it perfectly around that $1,375 to $1,400 range. That's going to be really critical that it sustains around that level. Now, this is certainly going to be a risky trade, and the reward is going to be what's a little unknown here. We'll probably be a little bit more vigilant in terms of what the expected reward is going to be as we get closer to their earnings date. But we are hoping for anywhere around 25 to 40% in terms of reward on this play. Now, again, this has been a very bullish name. It's been maintaining above their short-term moving averages. I know that they just had a little risk-off move on the downgrade, but again, Wall Street seems pretty bullish on this name. And again, based on past performance, they've done pretty well. So if they could hit that expected move right into that right sweet spot around 1375, this is going to be a pretty solid play here off of earnings.
Yeah, I mean, it gained double digits, about 11% in June, to your point. But all eyes, no doubt, on that July 17th date as far as that report card. Just broadening things out, Charles, what are your thoughts on the sort of broader market action today, given some of the trade uncertainty that we're seeing? Also, obviously, we're seeing shares in Tesla being weighed down by some of Musk's announcements over the weekend. A lot of question marks right now, a lot of moving parts. How are you assessing things as we stand?
We've been in a bit of a news-driven market. This has been going on for a couple of weeks. We saw last week finish off pretty strong on the holiday shortened week. It was actually a lot more active than we historically have seen. Today, the market is exactly what you said. It's trading under uncertainty. The July 9th deadline, which is now supposedly going to get pushed to August 1st, there's still some expectations that deals are going to be called or announced by that July 9th, and there could be some disappointment if there isn't. I think the primary focus is going to be on the EU, perhaps India as well. It's not so much that the markets will go aggressively risk off, but anytime we're trading at historic levels, the participants get a little bit nervous on whether they should take profits or hold stronger. So if there's any reason to go risk off, we're going to see that move, but I don't think it'll be sustainable. I think that it'll actually be a good opportunity for short-term traders to buy in. And again, now that we've kind of pushed that line a little bit more forward towards August 1st, it gives the markets a little bit of grace to price in some, positive news and potential opportunity here.
Okay, so a bit of breathing room for now. Charles Moon, thank you so much. It's been a great chat. Charles Moon of Prosper Trading Academy.